Welcome to Willis Weighs In, where we discuss controversial and newsworthy tax topics. I'm Jasper Smith, Executive Editor for Commentary here at Tax Notes. And today I'll be hosting the episode and talking with our regular host, Ben Willis, as well as his guest, Jillian Brennan. Of course, Ben is a contributing editor here with us at Tax Notes, and Jillian is a recent graduate in the 2021 valedictorian of the Villanova University Charles Widge School of Law class. So first of all, Jillian, welcome to the show today.
Thank you for having me.
Absolutely. So I hear you were in Ben's first class there at Villanova Law School.
Yes, I was in Professor Willis's, or I guess Ben, as he keeps telling me to call him now that I've graduated. I was in his taxation of business entities class. And correct me if I'm wrong, Ben, but wasn't that your first time teaching, like ever?
It was not only my first time teaching, Jillian, but it was also the first time schools dealt with the coronavirus pandemic. So it was quite a big semester for me to dive in, teach subchapter K, S, and C, and also deal with the remote. So it was quite a big adventure for both of us, I think, right?
Absolutely. Going remote was interesting to say the least.
Yeah.
Now, Jillian, be honest. How was he as a professor?
Oh, terrible. Absolutely. No, Ben was great. I mean, to say that Ben's knowledgeable about tax would be a gross understatement, as I'm sure you can attest to, Jasper. I think his main challenge was just simplifying the materials down for us. I mean, he's all the way up here, and for a lot of us, it was our second tax class ever. So just really making it simple for us was, like I said, his main challenge, but he did a great job of it.
Yeah, that's great to hear. It's not surprising either. You're right. I've never been in his class, of course, but I get a little mini lesson from him every week or so when he's explaining his articles. So I can definitely see how he would be able to relate that to a law school class. So what we're here today to talk about, Jillian, is your experience in writing your first tax article. So to start, can you tell us a little bit about what motivated you to want to write in the first place?
Sure. So Ben actually offered it to myself and my good friend Celso Leite. So hey Celso, if you're out there listening. But yeah, we got the best grades in his class, and he offered us this great opportunity to co-author, and far be it from us to say no. But we wanted to write about just something that we thought would have real practical implications for practitioners out there. And Ben had this great topic in his back pocket that he was willing to share with us.
Yeah, excellent. Maybe we'll be able to catch up with Celso on a future episode. And again, congratulations to you on your academic achievements this year. So let's talk a little bit about the article. You mentioned that Ben had this topic, and I know the topic you all chose was, I believe, zero basis debt. So let's hear about some about that topic. And of course, Ben, it is your show, so I guess we'll welcome your input as well.
Sure. So there's only two real cases that address this issue. It's Lessinger out of the Second Circuit and Parrish out of the Ninth Circuit. And they've both very similar factual backgrounds. The gist is just that a taxpayer is trying to avoid 357C gain, where they're transferring assets to their corporation, and the liabilities encumbering those assets are greater than their basis in those assets. So they also transfer a promissory note to make up the difference. And the IRS comes after them saying, no, you can't do that. You can't make up the difference in such a way. And both courts really ground their analyses in economic realism to say that, no, the face value of the promissory note can wipe out potential 357C gain. And as Judge Arthur Nims III in Parrish says, the whole idea is that this transaction isn't an exotic tax shelter. It's not the taxpayer getting a free lunch, and we kind of explored that a little bit more. And I'll let Ben get into this, but Revenue Ruling 8228 is really where we take it to the next level.
Just to pick up where Jillian left off with that revenue ruling, it really added a lot of clarity and I think a new angle and perspective to this historic issue that Lessinger and Parrish, which are well-known cases in the tax community, are known for. But even just thinking about class and learning about 351 and 357 and how Congress has encouraged 351 transactions and allowed liabilities to be assumed without there being a boot treatment, giving rise to gain, as long as those liabilities don't exceed the basis of the assets being contributed. And so as Jillian explained in the Lessinger and Parrish facts, there would have been gain triggered under 357C because the liabilities exceeded the basis, had it not been for a new asset that was created to give additional basis to the assets going into the corporation so that the liabilities did not exceed that. And I guess the court had a problem with somebody just, and here's my little prop, putting an IOU together and saying, hey, you know what? I just wrote IOU on this paper and I'm going to say it has basis. I think where the IRS went wrong, and it all stems back to their original Rev Rule 68, 629, where they said, well, you know what? When Professor Willis, when Ben creates this note and says, hey, I owe you money in my hands, it's got no basis. I mean, what did I do? I just wrote some words on a piece of paper. Where they fail to appreciate the mechanics of debt is that once I give this to somebody else and create a legally enforceable obligation under state law, that debt springs into existence. And that's when an asset is created. It's no different than when you purchase a house with a mortgage or use purchase money debt for any acquisition. You're giving somebody an obligation and you're taking an asset, and you get fair market value for that asset, which should be the amount of the obligation that you are now committed and on the hook to pay. And that's why historic cases like Crane and Tufts, which focus on debt, say, yeah, that's why you get basis. That's why you're not picking up income when you get loan proceeds, because you've given this legally enforceable obligation that offsets it. And so I think where we created a little bit of a new twist is just showing how the inverse can happen. In other words, when you have a distribution of a note from a corporation to a shareholder, it's clear that the shareholder gets basis, and that was demonstrated in Rev Rule 8228, where they had 351B boot. But that ruling is also clear that there was no gain that was triggered on the distribution of that note. And if that was an actual asset moving up to a shareholder that had zero basis because it's a self-created note, then you would have gain recognized. But in that revenue ruling, the IRS had a perfect understanding of how springing debt works. When it caused tax to the shareholder, they knew that it sprang into existence once it ran between the two parties, once the shareholder held the valuable asset, the payable, and the corporation was on the hook. But in the reverse scenario, they fail to appreciate that same springing logic applies. And therefore, you don't have to worry about 362 coming in and saying, oh, well, your carryover basis should be zero, because in actuality, on a contribution of a note, you have a springing debt coming into play, just like purchase money debt, for the shares received in that corporation. And that bifurcated transaction as a 1001 transaction gives rise to basis, as the courts properly determined in Lessinger and Parrish.
Excellent. Well, we certainly appreciate that high-level summary, Ben. And as readers familiar with your articles know, you're always going to give us the very nuanced and straight to the heart of the matter approach. So certainly if readers haven't had a chance to read that article, we certainly encourage you to go do so as soon as you can. And also, Jillian, we thank you certainly for the intro and the overview of the topic. In fact, I'll tell you, you sounded a lot like Ben when I heard you talking about the code sections. So I'll leave it to you as to whether that's a good or a bad thing. But with that in mind, how was the process of writing your first article? Can you talk to us a little bit about that?
Sure, and thank you for the compliment. I'll always take a comparison to Ben in terms of nuance and all those things. First article, definitely difficult. Ben was great. He sent us all these awesome articles and really helped us direct our research, but he certainly didn't make it easy on us either. He really challenged us to dig deep, think about the subject matter from different angles, kind of sit in the materials and just take the time with it to really make it into what we wanted it to be, which was practical, but also just different from all the other articles that were out there, all the different angles. So it was great to have the guidance, but certainly wasn't easy either.
I'm glad to hear that it wasn't easy for Jillian, because it was incredibly easy for me. So I know that there was a lot of effort that went into it. I can't take credit for it. Celso and Jillian just ran with it, and they did a fantastic job. And I think that's why it was hard work. And not only because I let them run with this article and really put it together themselves, but also it's a tough topic. Lessinger and Parachi have been debated for decades now, and the zero basis debt issue and treasury stock issue, which will probably come up in a future article. But um, these tough questions are difficult to wrap your hands around conceptually, especially as it relates to debt and zero basis and a lot of the mechanics that were really required to get into. And Jillian and Celso were just all over that. Like she said, I gave them a few sites, but after that I walked away. They did all the hard work, and what I thought was very fun to watch was their collaboration. They really were passionate about it, and it was just inspiring to watch. I love that.
Thank you. That is a very nice explanation, and we're happy to hear that. And again, Jillian, Celso, great job. I've been working with Ben for many years, so I know if he says that you made his job easier, then that certainly is, again, high praise to both of you. So Jillian, do you have any advice that you'd like to share with those who might be looking to write their first article or who are currently writing their first article?
Sure. So this might be a little bit of a cop-out answer, but just like anything with law or anything worth doing generally, it's just a lot of hard work, a lot of just taking the time to make sure you're doing it right. Plan for a lot of drafts, plan for a lot of editing. If you can find a mentor, you can't have Ben, he's mine, but you can go find somebody else. My experience on the Villanova Law Review also really helped me. It really taught me that writing is labor of love, and good research skills are just absolutely king. And then Ben taught me how to take all that research and boil it down into a short and easy to read article. It was just really cool to turn something that I think could have been a 30-page law review article with a ton of footnotes into a brief practical article. So I think there was two ways of going with it, and it was a really wonderful opportunity to go the more practical route.
Yeah, and Ben, I know we can't forget that I believe this is your first experience writing with one of your former students. So did you learn anything during the process, or do you have anything you want to add in terms of advice for students?
I do. I think Jillian really reminded me something that I know, but it's easy to forget because I write so often. I write for a living now. But it's that the process and the journey is what writing is all about. And so it's so easy to visualize, oh, I've got my name on a published article. Look at this impressive publication that was willing to take a leap of faith on my writing skills and share this with the community. And when we do that, we often want to skip to that end, that process of getting there. And as Jillian said, really breaking down these issues, it was hard, but she always appreciated the learning side of it. And I think that's why she was so connected to the journey, the development, the process of going through the editing, the phases, doing the research, breaking it down into one step at a time, not letting that monumental hurdle of how do I get this well-written article out to some of the best text experts out there in the country for them to read and enjoy in a practical fashion. But really, how do I learn the most from this experience and benefit? So no matter what the outcome is, I will walk away having earned value to myself and my intellect and what I can offer to throughout my career. And seeing that with them was just was great, and it was very rewarding for me, especially as a teacher, having seen Jillian and Celso do that in the classroom and then watch them bring it out into this article that I think a lot of people appreciated. I know I got good feedback. I had to attribute it back to their good writing as opposed to mine. But yeah, I think really appreciating the process and learning to love learning, because that's what you're really doing when you're writing. You're teaching yourself, and you're doing it in a deep fashion. And so it was really great.
Great, very good advice, both of you. And I certainly echo your sentiments. And the only thing I'd add is just, don't be afraid to take the plunge. Get out there and try and then hone your craft. And you can only get better at something by constantly working on it. So Jillian, let me ask you, what's next for you in your career?
Sure. This summer, I'm studying to take the Pennsylvania bar. Hopefully, I will pass that. And in the fall, I'll start my career as an associate at Bakery Drinker Biddle and Wreath in Philadelphia. So just excited for what's to come.
No, that's wonderful. We wish you the best on the bar and in starting your career, and certainly hope this is not the last time that we get the chance to work with you in your career. And as we wrap up, Ben or Jillian, do you have any final thoughts that you want to share with the audience?
Sure. I'd just like to thank Ben for being a great mentor and my wonderful friend Celso for working on this with me. Wish you were here, buddy.
I'll also thank Celso, who's not here with us today, and Jillian for their great work. And I also have a special thanks to the host of today's show, Jasper Smith. I shared his article on writing tax articles with Jillian and Celso, and it has a great list of important factors for folks who are thinking through writing their first tax article. And personally, I use it myself. I peek at it once a year just to refresh on some important things. And so check out Jasper's article on writing tax articles and tax notes. I know we benefited from it, Jillian and I, and thank you for putting that together, Jasper.
My pleasure, Ben. Thank you. And I certainly can't take credit for a lot of the information in there. We just distilled some wonderful advice from a lot of practitioners, but I certainly appreciate the plug and would say that there's some good advice for anyone looking to write articles. And for those of you who are watching and listening today, we just want to thank you. Thank you for joining us. Thank you for taking the time to listen. And you can find Ben's articles, blog posts, videos, as well as a host of other contents, as always, at taxnotes.com. And of course, we encourage you and don't hesitate to reach out to Ben at his email address, which is ben.willis@taxanalyst.org, or on Twitter at Willis Weighs In. Thank you.
Willis Weighs In.